GKFX Prime presents the Market Analysis Webinar.
Hello everyone, welcome to another edition of the weekly webinar. There's some big things happening in markets. Gold just hit a record high. We also get some decent strength in the euro, up at 117. Bit of a downturn in stock markets, but other precious metals as well. Silver also making some big moves. Aussies are making some moves to the top side. So today, normal format is that we'll discuss currencies, commodities, a bit of Bitcoin and the S&P 500 to represent the indices. If you do have any questions at any point, just shoot me a message, or if you're watching this afterwards on YouTube, then of course just leave a comment and we'll try to make amends on the next video. Normal format here is we'll cover euro, dollar, dollar yen, pound dollar, Aussie dollar, gold, Bitcoin, WTI crude and the S&P 500. Right, let's dig into the euro. So started off here with a bit of a longer time frame than we'd typically look at. This is the monthly candlestick chart, and the reason I bring it up is this long-term downward sloping trend line, and you can see that we're currently testing the underside of that down sloping trend line for what you could say is at least 1, 2, 3, 4, the fifth time. You could argue it's maybe the sixth time, and typically a fifth test of a trend line or a support and resistance can often be the time when it breaks. And if you look at what we're dealing with here, we had a big rally off the lows at 105 in 2016. But we ran into that same downward sloping trend line. We meandered down, but we never broke 105 as support, and we've rallied up strongly in the last month. Obviously off the back of this EU recovery fund that's been agreed. It is a bit of a game changer for Europe, potentially. And so the price is pushing up to the top side, and we're testing this 117. You can see on this monthly basis, we're far from oversold. We've not been oversold. We're far from overbought, and we've not been overbought on a monthly basis in the euro since good old 2008. Right, putting down a little bit, you can see this in a bit more detail on the weekly chart, and then here we're at our daily chart. This was our triangle pennant formation that we had mentioned before, and we've pretty much perfectly reached the target of that. So what you do is you project the size of the pole upwards, and you can see we've just perfectly reached that target, and we've hit the 117 long-term resistance, 117 level, and that long-term resistance trend line. So there's a few areas of resistance lining up here for euro dollar after a big upside move. So the trend is higher, but just be wary of these big long-term areas of resistance. And of course we do have the Fed meeting this week. So let's shift gears to the British pound. So just start with the daily chart here, and you can see we've broken a 3-point downward sloping trend line here. It's not the most consistent trend line because it just involves that massive collapse in March. I think probably if we scale up to the weekly chart, the way I'm reading this situation at the moment is that essentially we were trying to put a bottom in some of these other major currencies. We were trying to find a top in the dollar. And then we just had that crazy situation in March where already some of these currencies before March has started breaking to the top side in a sign of a kind of long-term bottom, but you had that mad scramble for dollars with people seeking liquidity, selling out of all their investments and wanting dollars in cash to pay back loans, etc., etc. That you had that sudden last final bout of dollar strength. And possibly that is the final attempt of the dollar to push higher, and we've got a big long-term top in the dollar. That's a potential scenario that seems the most likely to me at the moment. So now you can see that on the pound we're at 128, the big figure that we're sitting at the moment. It's already broken this downsloping trend line, which, as I say, is slightly messed. If you discount the big March sell-off, then it looks more like a normal downsloping channel that we're breaking to the top side from. So again, maybe if you can think of it in those contexts, you had the downslope there, so craziness in March, in April, and then kind of back into the former price action, if you like, and now breaking to the top side. So both these charts, pound and the dollar, Pound and the euro look strong, but clearly just facing, particularly in the euro, facing some resistance, but also in the pound. So if you are trading this, you keeping aware of this trend, but also these big-term, long-term areas of resistance, and so then you're scaling down to the short-term charts to see if there are some reversal patterns happening at these resistance levels, or if just the price is continuing higher, then you know that these levels aren't making a difference. Okay, dollar yen. So this is when you know you're in a real period of dollar weakness rather than just a sort of haven bid where sometimes the dollar benefits but the yen tends to benefit more. Here the dollar yen is breaking to the downside, so you can see 106 was the big level of support here. We were in, essentially, as we've spoken about on multiple webinars, we were in this basically 109 106 range. But we had that big false breakout above 109, that big drop lower down to the bottom of the range, and what it looks like it was now was a big drop, a sort of flag-like pattern in the context of this prior range, and then it seems like we've just broken to the downside here. And so if that does pan out, it's going to be a sort of lagged similar scenario to the euro, where we had that first leg lower, been consolidating, and now we're making that second equal leg lower. And if that were in fact the case, it would take us down to 103, and at the moment we sit around 105.50, so potentially 250 points to the downside here. Just watch out. We've already had one false break through 106, and that, of course, that could happen again if we snap higher today, so watch where today closes. So Aussie dollar, thought it was interesting just to put a fib on this weekly chart. You can see that we're right into the 61.8% fib retracement, and we're also running into these prior lows from back in 2016. So we're talking long-term stuff here, but on a short-term basis, it's just a rip-roaring trend. We're pushing strongly to the top side, having broken 0.7. But just again, same sort of theory with the euro. Just keep in mind this two sets of resistance, if you like, at the Fibonacci and the 71 round number, if you can call it that, and those old lows, which you can see did basically, you could sort of say that those old lows represent the upper side of a kind of range, which is around 0.7. So if you say it's 0.7 is the kind of key price, and that's created a kind of zone of resistance from 69 up to 71, and we're still in that zone right now. So even though it looks like, if we drop down to the lower time frames, it looks like we had a consolidation and we've broken to the top side, but we haven't actually broken quite out of that long-term range yet. Once we do, and you can see I've basically drawn it through this latest peak. Basically, if we can break through that latest peak, and then we're not only breaking out to the top side in the short term, but we're also breaking a long-term area of resistance. So probably should have started with this really, but here's gold at a record high of currently sitting at the spot price as we have it on these charts, currently sitting around 1933. This is the daily chart, and we had this, basically all the rallies have been capped by this rising, slightly unusual trend line through the highs. And last week we highlighted this little consolidation phase. I said, we're basically consolidating around the 1800 mark, having achieved that. I said it didn't really look like a top pattern, but of course you can always have a quick breakdown and maybe a retest of that moving average that's been working quite well, the 50-day moving average. But as it happens, we just broke to the top side very strongly, broke out of that range, broke above that trend line that's been working for a while, and just soared what is now nearly $150 to the top side. And it seems like 1950 shouldn't be too much of an ask, but obviously the all-time highs were at 1920. So we're now $15 above that, so there's really no historic levels of resistance that we can deal with here, other than Fibonacci extensions and big round figures. I tend to prefer the latter, and I think we'll probably move for a test to 1950, and then maybe we get a bit of a pullback for those waiting for a pullback, because one has not happened in the last week or so. Even in the last month, you could see there's been very minimal pullbacks. There's just been short consolidation phases. But all looking very bullish in gold. Clearly just it's a bit late to be jumping into this trend on a kind of long-term basis. On a short-term basis, trend very much up. Maybe just look at the 1950 as an overhead resistance that could cause a slightly bigger pullback. So if we look back in the chart just quickly, this is something I wanted to do. I'm reminded of this scenario where, let's see if I get rid of that. Okay, if I turn these things off so it won't pull me back. So here we had like a longer phase of consolidation. Then you can see we kind of broke up through the moving average. We had a big rally to the top side. Something like this seems possible. We could be about here if we're making a historical comparison. Basically December 2019, and then you can see that we really rallied up for a number of days. Probably a few people started selling here. We had kind of a last exhaustion move to the top side, which you can see took us through that old resistance, and so you could make the kind of comparison with record highs now. Took us through that, and then we just snapped back and had one big dramatic day lower, and then kind of meandered lower for a few days, and eventually pushed to the top side. It was a bit of a kind of consolidation, another big drop lower, but the demand was still ultimately there. We held the lows and had another big push to the top side. So something like this scenario seems most likely to me, but of course it could be something more like this, where we had that double top in February and March, and have some bigger correction moves lower. What would cause such a big correction lower in gold? Well, some really good news, potentially a vaccine, but that's no one expects that to be announced in just a matter of days. It's still at early stage trials, and early next year seems to be the most optimistic you can be on that. So it's hard to see how that can really be the difference maker. Possibly the US stimulus bill being passed, but actually consensus is that they will pass it, so that doesn't make a whole lot of sense. But obviously that would be good news it'd be good news for America, potentially good news for the dollar, and that could see some weakness in gold, but hard to really see what the big catalyst would be for such a collapse like that. But clearly we're looking pretty overbought, so it's a risk. But to me it seems like a secondary risk to this, more like a few days of sharp declines before another big move up. But let's see. Okay, a bit more quickly on WTI. To me, the ups, clearly we're in an uptrend here. We're making higher highs and higher lows, but you can see on this daily chart that we've basically ran out of momentum a little bit, above $40 on WTI. And this area of resistance based on these lows here, I think, is why we're stalling out. And I've said the same thing for the last couple of weeks, around 42, that those lows from 2017 and 2018, basing at 42, that's quite a hard area of resistance to get through. And what makes sense to me is that we do actually get through them, but we just need a bit of a snap lower first to collect up some more buyers. So if we break this rising trend line here, to me a natural target would just be to test that old high down at 32, and that would be a $10 drop, which would be a little bit dramatic. That would actually be a 25% decline basically, but nonetheless you would still be generally in the longer term context in an uptrend, and probably have a bit more momentum for the next test of 42 to get through it. So the trend's still up. We've not had a break of this trend line yet. We could just break to the top side. That's very much possible. We might just be absorbing sellers here, ready for a topside breakout. But we've come pretty far since those dramatic lows where we went negative on the front month WTI contract. We've not really had a really substantial pullback since then. So to my mind, it seems equally likely that actually we do get that drop down to maybe 32 again, just a retest of the old high to confirm we are in an uptrend. So look out for that. But it's, you know, your risk to rewards are pretty decent either way on this one, because you're looking at either breaks through 42, which is a clear resistance, or breaks below this rising trend line, and 42 is not much beyond that in terms of you knowing that you're wrong on that break. Okay, let's move over to Bitcoin. Clearly gold getting all the headlines, but Bitcoin back above 10k. That's pretty significant. It's been consolidating under 10k with a few little false breaks above it since August. No, hold on, what am I saying here? Since May. And so we're looking at a kind of 2-month range breakout here. And it fits in with this triangle pattern that we've been talking about for a while. We highlighted the breakout last week, and that breakout has actually continued. We're up in overbought territory on the daily chart, which to me is not necessarily a sell signal straight away. We could still get a push up to test this old high here, which is more like 10,500 than the actual 10,500, more like the technical resistance on the chart. 10,000 is a kind of the psychological level that everyone's kind of listening out for moves above. But it's looking better in Bitcoin here. This to me looks like we've survived a break through this rising trend line, and we've broken through the declining trend line instead. The triangle has broken to the top side. It may not get much beyond 10,500. But that's it. The momentum is bullish right now, and I think the best thing to do is to assume that the bullish momentum continues. Particularly, that would be confirmed if we get a close through 10,500. Okay, last but not least, the S&P 500 representing stock markets. Well, this has been for a while. It's been the most exciting market and most buoyant market, but actually we've really been in a kind of consolidation phase since early June, and we did make new highs last week, but then we snapped back lower again, and it was the first weekly loss in 4 for the S&P and the Dow, I believe, and the Nasdaq just had its second weekly decline, its first back-to-back consecutive weekly decline since May. So bit of a kind of technical signal that some weakness is coming through on the Nasdaq, and this whole thing has basically been driven by tech stocks turning lower, and I think probably related to that is the rising US-China tensions, which last time around did kind of bear down on the tech stocks, which tend to have supply chains in China and also are trying to do a lot of business in China too. So we've technically here on the chart we've broke what you wanted to see. Basically is we had that breakout to the top side of 3,230. We moved up, we tested it, that was good, that was a kind of bullish confirmation. We rallied up to a new high, but only just, and basically made a little false breakout through 3,280, and we rolled back over, not only back through that high there, but down through that the high from June. And we seem to be retesting it from the underside here, and we're on a 4-hour chart, so there's not as much significance, but you can see we're kind of under testing that 4-hour 20-period moving average as well from the downside. If we get some follow through to the downside here this week, remember it's a big week for corporate earnings. We've got Apple, Amazon, Facebook results all coming out this week. If we do get some follow through to the downside, maybe these results disappoint. Microsoft did not disappoint last week. Actually, its earnings beat expectations, but its shares dropped. Intel did beat expectations, but gave pretty weak guidance. And so I think that's possibly what people are worried about here, is actually the Q2 results are decent from the tech companies, but they're looking out into Q3, Q4 and not feeling so good about it. and they give weak guidance, and the shares are probably losing a bit of steam before results and could lose some more steam after the results if that's what we hear from the management, and that could be a reason why we get another little drop. And where could that drop end? Well, potentially 3,150. That's where we had these old highs through the middle of June, and it's where this rising trend line comes in that connects the May and the June, middle of June and the late June lows. And this on the 4-hour chart, it's the 200-day moving average, but actually on the, let me just double check what settings I've got here. Yeah, the 200-day moving average is a bit further down, but that's the 50-day moving average in that kind of vicinity of around 3,100. All right, I'm going to leave it at that. Thank you very much for attending. Good luck for trading the rest of the week. And of course, if you did enjoy the video, make sure to click on the subscribe so you don't miss next week's. Thank you.